Hello, and welcome back to Understanding Your Economic Engine. My name is Rick Phelps, and I'm an action coach, business coach, and this is session 6 on productivity. Today, we're going to introduce 3 measures of productivity, one on your system and how it earns money, another on your sales process that makes money, and a third on your quoting system. These are critical key performance indicators for your business and are an important part of your business dashboard. So let's jump into it. A little bit of a quick review. Typical cost accounting says that every product that you sell has, first of all, the cost of goods removed from it, which includes your internal direct labor and your external costs of materials and whatnot. And then it carries along some of that gross profit, which pays for variable costs and fixed costs, and ultimately deposits some profits into your bag of cash, right? And this is actually a poor description of what actually happens in your business. It adds needless complexity. It leads you to all kinds of variance analysis. And as soon as your business doesn't make money or doesn't make much money, it pretty much descends into a pile of BS. And so we want to look at a better way of looking at and analyzing your business. And it turns out there's a much simpler way, and that's through throughput accounting, which simply takes the cost of goods sold to be the truly variable expenses that leave your business, leaving you with throughput dollars. Now, we've never actually formally defined or given you the definition for throughput dollars, so let's do that right now. Throughput is defined as the rate at which the system generates money through sales. All right. We also then have that throughput dollars throw into our operating expenses, which we have also never really defined. So let's define it right now. Operating expenses are all the money the system spends in turning inventory into throughput. Right? It's a little bit different than what shows up in your financial statements, most likely under operating expenses. And that's principally because your cost of goods sold probably includes direct labor, which we would put into operating expenses. All right, so with that definition, we can define productivity very simply as the throughput dollars over operating expense, or written as a formula, P, productivity, is equal to throughput divided by operating expense, or T over OE. This is a very, very important measure, very valuable measure, because it measures your productivity at the system constraint. And that again reinforces the notion that the productivity of the system is the productivity of the constraint, or more correctly, the productivity of the constraint is the productivity of the system. All right. And so we want to monitor the productivity of your business, not in every single operation, but as a system as a whole. Right. So productivity of the system constraint tells how well your system is earning money. And we'll define a definition for earning money versus making money here in a moment. But we earn money, and when productivity, the ratio of throughput dollars over operating expense is equal to 1, they're equal, you're at break even. Right? So anything less than 1, you're losing money. 1, you're break even. From 1 to 1.1, you're making money, but not enough profit to really sustain the business. And so we're looking for a minimum productivity level or value of 1.1, which means you're earning at least a 10% net profit, which is the net profit generally considered to be necessary to sustain and grow your business. So that's the productivity measure for the system, and that's earning money. Now, when you actually go out and sell your product, that's when you make money, right? So we make a slight distinction between making money and earning money. Making money is when you sell your product or service, but you haven't realized any income yet. And then earning money is when you produce the product or produce the service and get paid, all right? And so we want to not only track the productivity of your system to earn the money, that is to produce the goods and services to bring in the revenue, but also the productivity of your sales process. And so you need to calculate for all the jobs that you've won throughput dollars, which you should have in the quoting process anyway. So you can have a productivity throughput dollars sold over operating expense, and you can track productivity of the sales process. And you can go back one step further and you can track the productivity of your sales funnel, particularly if you have a quoting process. If your business requires you to generally produce quotes that may or may not turn into business, then that quoting process can have a productivity as well. But you do need to take the throughput dollars and of each of the quotes and factor that by the conversion rate. So if 50% of your quotes turn into sales, then you would factor the throughput dollars that are out there in open quotes as at 50%. So that would modify the formula slightly to throughput dollars times conversion rate over OE. All right, and this will give you 3 very powerful metrics that give you a picture of what's happening in your business currently. Are you earning money? Are you at least in the green above 1.1 productivity? Is your sales process selling at a rate that's going to keep you in the green? And is your quoting process doing the same? Right? As opposed to your dashboard looking like this, where your earning is good. So currently, right now, you're in good shape, but your sales that you haven't produced yet, they're right at break even. And your quoting process for the same time period is in the red, it's losing money. You're not quoting enough to make the money you want to make. And so these give you a performance measure of productivity of your system and the productivity of the future. What's coming down the pipeline at you. Very important measures. We like to encourage our clients to look at these numbers at least on a weekly basis, every week. Know what you earned, know what you made, and know what you quoted, and convert them to productivity rates and monitor them through time. And you'll get a great leading indicator of how your business is doing. And once again, that financial statement, the profit and loss statement coming out at the end of the month, several days into the next month, it'll be nothing but a recap of what you already know when you track your productivity on a daily and weekly basis. So I'm Rick Phelps. If you'd like help thinking through and applying these metrics to your business, give me a call at 216-533-1387 or reach out to me at rickphelps@actioncoach.com. Don't be shy. I love to help business owners and particularly manufacturers. So again, thank you for joining us on Understand Your Economic Engine, and have a safe and profitable day.